Today is Monday, January 29th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS's Senior Financial Economist. Steve, let's start with the grain markets this morning. Soybeans are back near $10, and corn and wheat futures are back over the 100-day moving average for the first time since last August. Why do you think we're seeing this strength, and do you think it can continue?
I think we're seeing the strength mostly because of the weather. We've got dry conditions in Argentina, too wet conditions in Brazil, and we have dry conditions that continue here in the southern plains. And we've got the funds still short, and we could actually move a little bit higher on this short covering. $10 is going to be pretty important resistance, just like the 360 area in corn and the 450, 460 area in wheat.
Steve, you mentioned the funds are still short corn, wheat, and soybeans. Does the lower dollar and higher energy prices suggest that they'll cover these positions soon?
They should. As we get closer to, let's say, April 1st, we have the weather uncertainty in front of us. There really isn't any need, even though we've got plenty of world stocks, for them to keep those short positions going into the weather uncertainty.
Steve, you mentioned to me that there are three key factors to U.S. grain prices in 2018. What are those factors?
Well, I think number one is weather. We've got a La Nina that's kind of weakening, but there should be a pattern where the southern third of the country might be dry this year and the northern third might be wet, and that might not get us trend yields, which could help prices. Number two, I think China continues to see a better economy. I think they'll see a demand for commodities. We'll just see if they filter into some of the grains, but they'll still need soybeans. And then finally, I think globally you're seeing better economies. You're seeing probably an increase in global food, feed, and fuel demand, and all those things should help grain prices.
They should, but I know there's some questions regarding U.S. trade policy. How does U.S. trade policy impact U.S. ag export demand?
The President of the United States is having a State of the Union address. Some people were concerned that he might take apart NAFTA during that speech. NAFTA is an important component of the policy of the trade between Canada and Mexico. They've already seen some issues with TPP, in which other countries have been able to form alliances outside the United States. So it's very important that they come to some agreement, and the NAFTA talks are kind of two-sided. Some people will give up a little, but nobody wants to give up a lot. Instead of attacking NAFTA or taking it apart in his speech, he might announce a $1.7 trillion infrastructure spending program. That'll help the economy, it'll help spending, but at the same time it might increase the deficit down the road, which we'll see if that continues to weigh on the dollar.
Alan, let's talk financials. Global bond yields continue to increase, with the yield on the benchmark U.S. 10-year note hitting its highest level in almost 4 years. What is the outlook for interest rate futures markets now?
Well, the outlook still is bearish. In fact, we just had the 30-year bonds hitting a 10-month low on the futures. So nothing has changed. We still expect the Fed to raise rates 2 to 3 times this year. So my outlook has not changed at all. Interest rate futures markets, I believe, will continue to decline, and I believe this is a trend that will probably persist well into 2018.
Alan, looking at the dollar, the U.S. dollar fell to 3-year low last week. Today, however, the greenback is higher due to rising interest rates. Do you feel the U.S. dollar has bottomed?
No, I do not. I think there is more to go on the downside. Normally, when interest rates are increasing, that would be considered to be bullish for the dollar. But we have to compare interest rates here in the U.S. to interest rates elsewhere in the world. And it looks like some of the central banks are actually withdrawing some of their accommodation faster than the Fed can raise rates. And that, of course, would be a bit bearish for the dollar relative to other currencies, especially the euro currency, which I do believe will advance.
Finally, Alan, stock index futures slightly lower today, maybe in response to rising U.S. Treasury yields. Are interest rates high enough to reverse the bull market outlook in stock index futures?
I believe they are not. I think that this bull market can withstand higher rates. I think this bull market can withstand 2 or 3 rate increases from the Fed. So my outlook has not changed at all. Any breaks in the indices should be used as buying opportunities. There is a lot left to the upside, price-wise and time-wise, for stock index futures.
Finally, guys, big football game coming up next Sunday in Minnesota, with the favorite being the New England Patriots versus the Philadelphia Eagles. Any predictions for that game?
I'm going to have to look to Steve on that one.
There's a $10 million bet that the Eagles win.
Well, let's see. There, I think the odds are against them, but we'll see what happens. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.